Okay, hello guys, GM guys. My name is Trader Sawyer. Folks call me Coins and Consequences. Okay, I'm dropping this video in regard of a question being asked by a friend asking me why I have this buy. Yeah, he was he was pretty optimistic, aware of the buy, but he was concerned. He has been seeing this kind of strategy for quite a while, but he hasn't really gotten a knack of it, how it's been done. So I promised I was going to explain. So this how it works. This model is it's practically comprised of two things, which are the structure mapping. Of course, trend structure comes first in SMC strategy and Algo strategy, which is what I trade. Structure mapping comes first, trend comes first. So this it entails structure mapping and discount and premium price array. Yeah, this particular setup is as a result of two um two modules, which is the first one is structure mapping. As you can see on a daily time frame, daily break of structure, daily structure. This is the low, all-time low for the daily low, the all-time low on a daily time frame. Yeah, and this is the all-time high on the daily time frame. This is the all-time high on the daily time frame. So this is the all-time high on the daily time frame. So like I said, it comprises of structure mapping and the premium and discount price array. Yeah, what do I mean by that? For those who do not know, I'm just going to say this real quick. Price action has to do with the movement of the trend, a reversal, then continuation, something like this. Okay, movement of the trend, reversals, then continuation. So it's as simple as that. Movement, reversals, then continuation. Now it's a common fact that when price tends to reverse, price looks out for, most times, not all the time, there are exceptions to these things. Most times price look out for the equilibrium zones before continuation, the equilibrium zones, or even way beyond the equilibrium. Sometimes it's price way down to the discount, or way up to the premium. Discount way down to the discount, reversal to the discount if you are in the uptrend, then reversal to the premium if you are in a downtrend. So this is how I did it. When I saw a break of structure, yeah, of course these are minor structures. If you know what you're doing, if you know your crafts, if you know how to cut your onions, you trade in between all this, you catch all the moves. If not all, at least you have good RRR and good, yeah, you make good money from the movement from here to here. So when price was ready to reverse, there are ways, also by price taking the recent pullback or recent liquidity zones and the likes. Yeah, lot of details to go into that, but we are not here for that today. So when price signals a reversal, I knew price was ready to reverse. So what did I do? I map out my unmitigated order flows. We have an unmitigated order. This order flow has been mitigated. Yes, this order flow has been mitigated. An internal order flow has been mitigated. This order flow hasn't been mitigated yet. This order flow hasn't been mitigated yet. Yeah, so I map out my unmitigated order flow. Then after that, I map out my premium and discount price array. I want to know my zones. So from year to year, is the premium zone. Okay. From year to year is the premium zone. Okay, that's not what I want to do. Okay, now this is what I want to do. Okay, so that's the premium zone. While from here to here is the discount zone. Okay, discount zone. Okay, so let's do with what we have here for now. Okay, good. So premium discount. So most times, yeah, generally speaking, most times, not all the time, there are exceptions to all these rules. Most times price tend to seek out the equilibrium, the zone between the premium and the discount is the equilibrium. Price tend to seek out the equilibrium zone before moving, before continuation. Most times, at times market might not even price near the equilibrium. At times market can just price to this liquidity point. Sorry, at times price can just price to this liquidity point, then move to the upside, or price to this liquidity point, then continue to the upside, So apologies for that. So when that is being done, price there or price there, but most times price take out the equilibrium point, the equilibrium zone, which is this green line, the 0.5 zone. So or price might price here. So it all depends on the price action you're seeing. So when I marked my daily low and my daily high, sorry please, excuse me. Okay, sorry about that. Okay, good, we are back. Sorry about that, apologies. So I will do well to avoid that next time. Okay, so sometimes market will price to the discount zone before moving up, sometimes equilibrium, or sometimes before the equilibrium it reverses. So it all depends on the price action you're seeing. So if you know what you're looking for, you know when price is ready to reverse, to continue the trend, to end the reversal movement and continue the intended trend. So I looked for the POI, the possible entry model POI at the equilibrium zone, which is this FVG. This FVG at the equilibrium, and we have a liquidity point here, liquidity point, liquidity week, liquidity zone, inducement, whatever you want to call it. It is what it is. So we have our FVG here, then the liquidity zone here, the liquidity point here, this pullback. We have this pullback. So if we check this this FVG, we realize that it hasn't been mitigated. The 50% of the FVG hasn't been mitigated. As you can see, 50 hasn't been mitigated. So most times market tends to price to the 50% of the FVG or 50% of the price area, just like it did here, 50% of the structure before returning. So market did well to come back to 50% of this equilibrium zone, which is also this 50% of this FVG, then rejected. Now when price rejected this here, as you can see, I marked 2 hours break of structure. 2 hours break. A lot of people be like, why 2 hours break of structure? If you are good, if you know how to cut your onions in time frame analysis, just as we have models for price analysis, we have models for time frame analysis too. So in time frame analysis, when price mitigates a daily OB or a daily point of interest and reverses to take out a strong 4 hours or 2 hours high or low, that's a change of character for me. This is what works. So if you go down to 2 hours, we are going to see a break of structure. On the 2 hours time frame. So not just any structure, it has to be a strong high, not just any high, it has to be a strong high. For those who know how to mark their highs and lows and trend, this will be easy for you. But if you don't know how to do that, I guess I'm going to have to have a course on that later. So you can see a downward movement here, a pullback, a valid pullback. Market priced below this low, then market priced up to take out this pullback, this liquidity point. So which makes this a strong high on a 2 hours time frame, a strong high. But however, as we can see, when price mitigated this daily POI, price came right to this 2 hours high to take out this 2 hours high, to take out this strong 2 hours high. So for me, this is a change of character on the daily time frame. So when price did that, price reversed, then pushed up again, pushed up to create a new high. But this time this high wasn't a strong high. It broke this high with a weak, which makes this high not a strong which makes this high a strong high and this low a strong low. I didn't price broke this high with a body or a momentum a strong high, with none of the exceptions at sites. We will say that we are expecting price to come close to this low, then push up. But as we have it, price didn't break this high with a strong momentum of it, but it broke with weak. So it makes this low weak, this low a weak low, and this high a strong high. In that case, if we go to 4 hours time frame scaling up, we are going to see that this is a 4 hours high. If you know how to mark your structure, you know that this is a 4 hours high. So price broke the 4 hours high with a weak, rendering this low to be a weak low. This is a weak 4 hours low and a high and a strong 4 hours high, 4 hour high. So which in turn justifies the fact that we're expecting market to price to this zone. There's something called RTO, return to order. It doesn't, a lot of people say return to order block. It doesn't necessarily mean another block. As long as it's a POI, it's where there's an order that moves the market with momentum, that moves the intending trend. So it's, you can call it, it's an order. It's a supply zone or demand zone. So there's something called return to order. Return to order is when price gives a change of character. We expect market to reprice to the zone that signals the change of character, that marks the change of character, to reprice to it before continuing the trend. So this is how it works. This is how it works. RTO. Okay, change of character here, return to order, then move. Yeah, it's as simple as that. It's as simple as that. Or you can have this, it's still all the same thing. Change of character here, then return to order, return to order, return to order, then push up. Still the same thing. Okay, let me cancel this. I don't want a lot of this on my chart already. Okay, let me leave it. Let me leave it. So change of character here, change of character here. Okay, so it also happens in cases of break of structure, like a continuation of trend. It happens also. So, but in this case, we are talking about change of character. So here's what we return to order, return to order. So we're expecting a return to order here. We're expecting a return to order here, a return to order here. We're expecting a return to order here. So we're expecting a return to order here. This is the candlestick. This is the order. This is the zone responsible for the change of character. This is the zone. This is actually an unmitigated wick. There's a chance price will come straight down to this level, to this unmitigated wick, but I won't take my chances. I'm okay. I'm not chasing the market or chasing money or anything. So just leave it the way it is, the way the algorithm has it. So there's a chance price just come here then return. Yeah, there's no rule or exception that say that price must mitigate here. And price, there's a high tendency, it's high anyway, that price comes here before going up. But I don't want to food more no sentiment. So I'll just cut my onions the way it is and take my profit. So that is how we come about this buy and this sell. So it's as simple as that. So a recap on this is that we mark our daily time frame, we mark our daily structure, okay, we mark our daily structure, break of structure. This is the all-time high on a daily time frame. We signal, we sense, we see, we confirm a reversal. We mark our equilibrium, our Fibonacci tool to identify our premium and discount array. So once we do that, we mark our order flows or mitigate order flows, liquidity points, most importantly the equilibrium. We identify, is there any POI closer or near the equilibrium zone? Yeah, there is. This is it. So once price came all the way here, then react, give us a change of character. It's, for me, daily time frame daily time frame FVG mitigated, change of character on the 12 hours time frame. That's a go for me. This is an A setup for me. It's okay for me. So except price change character here along this way, yeah, it happens. So that's why we have to actively be in the trade. But so far price hasn't shown any sign of change of character to the downside, probably to take this low out. So far we are good. So change of character 2 hours time frame, good for me. We pick our order block or mitigated zone responsible for the change of character here. We have our inducement here to feed in for this, to make this POI even much more valid. We have it here. Then price comes way here, price do something like this, comes right here, then move upward. It's as simple as that. So it's not so difficult. Practice makes perfection. Just keep showing up, keep doing the same thing. It's as simple as it is. The same thing, the same price, printing the same money all over again. Nothing new, nothing old. It's just what it is. So that's that about that. I hope you guys were able to I hope you guys are able to understand what I just explained here. So if there are any questions, do well to message me on Twitter. Trader Soy, or on Telegram, Trader Soy. So that's that about that. Do well to take care of yourself. I remain your humble tutor, instructor, coins and consequences, and have a beautiful trading day. More TP, less SL. Bye. Thanks.